Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move this Wednesday. I'm trying to think what day it is. With us is Bloomberg News cross-asset reporter Isabel Lee back in studio. Let's start with Caterpillar, always an important one to watch.
Definitely. It's a bellwether for the health of the economy, and its uncertainty really has left a lot of investors a little spooked. So shares are edging lower by 1.5%. And it's another company that again presented dual situations. So the first is, if tariffs are enacted and if we do see a recession by the second half of the year, they expect slightly lower sales this year. That guidance came in line with expectations. The second is, without tariffs, the company said the profit will be at the top end of the range with sales little change. So for the quarter, the company posted earnings that fell short of estimates, though. But again, it's really just this uncertainty.
So this is a thing now, Carol.
I think so.
Because
It's remarkable.
2 weeks ago, United did this.
Yeah.
Yes.
And Carol said, I don't remember the last time anyone has done this. I said, I don't remember when anybody has done this
Gina
before.
Moran Adams, I think, said the same thing, that
Yes.
she and all of her coverage, right? So what's interesting is how diverse those two outcomes are and what it says about the environment we are. We could go this way or this way, and they're very, very different.
But one would think, though, I mean, not investment advice, but at least some guidance is better than no guidance, because that also is becoming a trend.
Very good point. Starbucks. You've got your eye on what's going on with Starbucks, too.
Yeah, so the stock has pared some of those losses, but still edging lower by more than 6%. So I think the word for Starbucks is progress. We have the CEO saying that the coffee chain is making progress, but of course, the flagging sales in the latest quarter is really adding pressure. We have same-store sales declining 1%. That's short of estimates. EPS also missed estimates. So the new-ish CEO, Brian Niccol, said that there's no denying the results were disappointing, but he added that they're making progress under the hood. And if you think about it, like, I didn't even have to read headlines. I do remember some of the changes he made, which is like avoiding long lines, streamlining the menu. He said that because there are so many people ordering online, the people in store are waiting longer. So he's looking to change that too. A little fun fact, though, since he took office power, since he assumed the role in September, shares have edged lower, I think, around 16%.
Have you noticed the writing of your name on the mugs, or on the, not on the mugs, but on the paper cups? That's what they're doing. They're writing the names instead of printing out the receipts.
I see. That's
and putting them
good,
on.
because it used for a while to be a sticker. Yes,
Yeah.
I love the writing of the name.
Okay.
Yeah, but now the matcha there is a little pricey, so I only buy on special occasions.
Well, this is what's interesting, right? He talked, I think, about same-store sales numbers, right, being higher, but this is something that is such a great indicator about the consumer if you're going to start cutting back. You know, this is something you could potentially say, well, maybe I don't go in and buy my, cup of Starbucks every day.
That adds up.
It does add up.
Yeah, this is among the companies, our write-up says that Kraft Heinz, JetBlue, Chipotle have all warned that economic worries are spurring shoppers to pull back a little bit.
Yeah, keeping an eye on this one. Also watching Snap in a big way. What a big move.
But really big move, down by 15%. It was down as much as 16% earlier, if I wasn't mistaken. That's the most since at least August. So the company narrowly beat revenue estimates, but declined to issue a sales forecast. So again, this is the trend. And like many others, it cited really macroeconomic headwinds for its advertising business. And the angst in Wall Street was evident. We have Morgan Stanley saying that the decision to pull the second quarter guidance this early in the economic uncertainty speaks to how the business is likely in worse shape. I thought that was really a strongly worded statement. We have Guggenheim, Raymond James, Citi also cutting their price target. But to your point, they're not the only one. JetBlue pulled full year outlook. I think GM withdrew earnings guidance. Porsche said that they're shrinking margin profits. It's really a scary and uncertain time for the companies.
I mean, you do wonder at this, juncture whether or not how much of it is tied to what's come out of the administration, the uncertainty, or whether there are some companies who had issues kind of coming into the new year. And so is it an opportunity for the C-suite to kind of throw it all in, the whole kitchen sink idea? I'm not saying that that's it, but.
Absolutely. There was one person, though, in my inbox who said that, why did Snap do that? I mean, people are on their phones now more than ever. I mean, if you can't buy, at least you can scroll through your phone.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.